Today we're going to be talking about stocks on sale. As we can see here on the screen, we're going to be talking about long-term stocks that will potentially have capital appreciation for us. We also have the ones with dividends with also potential to have capital appreciation. And at the end of the video, we're going to be talking about a couple of small caps or penny stocks for trading. Okay, let's jump into this. One thing to keep in mind is the potential of the US dollar to fall. And there is also the potential of the US dollar to fall against the Canadian dollar. If that's the case, which honestly we don't know, but if that's the case, you could potentially think about investing in Canadian stocks if you can. And I'm going to be showing a couple of stocks, a couple of companies, or Canadian companies you can invest, companies that are on sale. Of course, we don't know about this, where the US is going to go, the US dollar, the Canadian dollar. Canadian dollar may face some struggles, so we just don't know what's going to happen. We're going to start talking about bank stocks, and there's a lot of criticism on Warren Buffett because he's buying Bank of America recently. And at some point, these banks will actually be a good thing to buy. I just don't know if it is the right time or not, but it could be. It could be. So we start talking about banks in United States and bank in Canada. So a couple of banks, JP Morgan, Bank of America, Wells Fargo, Citigroup. In Canada, Scotia Bank, TD Bank, RBC, CIBC. So some of these banks, they pay some very good dividends, and you have potential for capital appreciation as well. Of course, we don't know the time frame, but at some point for sure these banks is going to be worth to look at. In US, we have JP Morgan, just as an example here, paying a 3.7% dividend. And we can see the price sitting here about $99, and it had a high of, about 140. Actually, if you look at 52-week range, we see 141. So you have a potential of capital appreciation along with a good dividend. So Canada, I'm selecting here Bank of Nova Scotia, Scotia Bank. There is a very good dividend at 6.41% at this point. Stock is sitting around $56.9, and you see 52-week high of 76. Good potential of appreciation, so worth considering. It's good to mention that all of these banks, US and Canada, they're in much better shape. That's what everybody says in terms of balance sheet than in the 2008-2009 crisis. Another thing that is very good to look at, foreign stocks. Stocks from other countries outside US and Canada. And I'm picking here mostly Brazil because there are a lot of stocks on sale in Brazil. You have to understand the potential of the country, political and economic risks in Brazil. There are some risks, but a lot of these stocks, they're really already on sale, and like even if they drop, for sure the potential is very, very good. I'm going to show you a couple of them. And there is also the ETFs for the country. I have here on the screen iShares MSCI Brazil Capt. So that's an ETF with a few companies in it, very safe. Also you have for some other countries, even for emerging markets, EEM. And you have ETFs for India, Europe, China, whatever, different places. The only thing I found is just Brazil right now. It seems to be the best one, at least the ones I've been looking at in terms of stocks on sale. I'm gonna show you a couple of them. So Ambev as we saw, is a beverage. It's a very big company. It's a very good company, very safe, paying 4.85% dividend. And you have a potential of price increase from about 2.46 right now up to 3.8 if it goes to 52-week high. But I mean, if you're long on these, it's probably going to go much higher than that. So pretty good. So Ambev, just a small highlight here, operates in 14 countries in the Americas. So it's distributing beers. So all of these brands here, very popular brands, soft drinks as well, Guaraná, there's Pepsi. So it's a pretty good company. So another company is Petrobras. I talked about that company before, and it's paying about 4% dividend. The price is sitting around 8.6 right now. I bought this company even was below $6, and I invested a couple of times, but I don't have a position right now. So if it goes back to 52-week high, it's going to double your price, but it's an oil and gas company, and you see it may take a few years for that. Price target in 1 year is close to $14, so it's a pretty good company. Price may decrease a little bit, we never know. I mean, anything close to $6, $7, it might be very, very, very worth to take a look at. This one is very, very worth looking at. I'm actually keeping a close eye on this. It's a bank, Banco Santander. It's a Spanish bank, but this one is in Brazil. We have to look at the ticker symbol. There are a couple of Santander. You have to look at the ticker symbol for Brazil. There are a couple of different ones. I'm suggesting the one from Brazil paying almost 13% dividend and a good potential of capital appreciation. If you look at that 52-week high, it can go, up to $12, $13, along with a very, very nice dividend. As a bank, it can go a little bit lower than what it is. It's actually very interesting because on March, the market low is actually not too far from what it is right now. We went lower after, which is interesting. In May, we went lower than $4, but it's already a good price. I'm actually having a close look at this. I will potentially enter a position soon, but I'm still looking at. So stocks in Canada, already talked about banks, but you have a couple of different stocks to look at. Enbridge, and you have option for Enbridge in US, is a energy transportation, oil and gas, pretty good balance sheet. All of these companies I'm showing you, they have very good balance sheet in very good position. So Genworth is a private residential mortgage insurer. So it's a pretty good company in Canada. This one in Montreal, Heroux-Devtek, is a defense aerospace. They produce landing gear for aerospace and defense. So that's pretty good companies. I'm gonna show you some of them here. So you see the chart for Enbridge sitting at $44.17 right now. The potential to grow, this is a pretty good company. It's very low with a very high dividend, really, really good. It can go down, it can go lower, yes, but it's pretty good. Genworth, is it worth? I think it is worth 6.08% dividend. And there was a jump like 2 days ago, something before and after earnings. So I would probably wait a little bit more on this. Hopefully it comes back to the low 30. And then you have a potential of capital appreciation here close to $60 or even higher in a few years from now. Heroux-Devtek from Montreal is a French company. Heroux-Devtek, that's a company in Montreal or close to Montreal area in Canada. This one doesn't pay dividend. This is for capital appreciation. It's a pretty good company, growing, growing, you have potential of doubling your money if it goes back to 52-week high, but it can go much higher than that because it's a growing company with a good balance sheet. You have to take a look. So now I'm bringing some small caps and penny stocks. You have to be careful. This is not a long-term investment, but it could become. You have to have caution. Also invest only a small portion of your account on that. Potential of big returns. I'm gonna be bringing the shots for ADMA and Liquidia. Liquidia, I would just probably, like in my opinion, wait. There is a lawsuit against Liquidia, so I would probably wait on that one. But you know, people are still buying. The first one is ADMA. Someone, like a subscriber, was asking me about ADMA, and I was right at that moment when I said wait, because the stock had jumped to, you see, 3.74 just a few days ago, and now it's back to 2.9. So now I really think it's good to think about it, because the company involved with COVID-19. It's a company involved with COVID-19, so the price is always jumping back and forth, and now I find it's in a good spot at 2.9. It may go down a little bit more, but you know, always look yourself, don't trust on me, because price can always go much lower than it is. But I mean, looking at the chart, I think 2.9, it might be a good place to start a position. There's a 1 year target at $10. What I find a lot of these small caps and penny stocks for biotech, you have to wait, have a bit of patience. Be patient. Of course, you sit in penny stocks, which can be dangerous sometimes, but for ADMA, I don't find that danger. For example, Liquidia Technologies, I brought this company before, and you can see that it's already uptrend. I would probably wait, because if we see on the news here, virtual conference they're going to be presenting, I think it's on August 11. So it's going to be next week, I guess, and I would probably wait. Usually these companies, the price goes up and it's probably going to come down after. I would buy below $6. If not, I would just wait. And there is a litigation. You can see on the news here some lawsuit against the company, so I'll probably wait until this is solved. That's at least my opinion. So what about gold and silver? Yes, I think silver has more upside potential. Gold and silver has already going up, but I think they're still gonna go up more. The only problem is really hard to know when to exit. But you know, I think for the years to come, it's still a few years. It's just my opinion. I think there's still upside on them, and still have some other companies like Intel, even IBM, old blue chip companies, but pretty good, paying dividends. And for Intel, for example, I think it is a pretty good option. You may still wait a little bit more, see if the price is gonna come down a little bit more, but it's a pretty good company. Anyways, that's it for the video. Have a good day.